Good morning. It's 7:52 a.m. Central Time. This is March 26th. This is Rich Pawson of the Critical Point podcast, updating you on the stock market by the S&P 500 mini futures. First, however, I want to take a look at what's going on in the bond market. This is a 10-year T-note futures. It's a weekly chart, and we're showing you model output, and the model saying one of the most important types of tops during a year should be in place, and the trend ought to be down into the week of April 13th, perhaps even as late as May 4th, week of. We think it should retrace at least to test this low bat last week, meaning we think it stabbed or dropped too fast, then rebounded too fast, too much of a knee-jerk reaction, and needs to settle down in here somewheres, perhaps dipping down back to the 134 level. Can't even rule out lower than that, but let's just say it's going to retrace some and consolidate some, and then we'll reevaluate whether it's going up. Now this means that will the correlation continue on a day-to-day basis of bonds and stocks? And so here's a chart that we can see what's going on here with the bond prices going lower, and then the stock market going lower, and then the stock market continue to go lower as bonds rallied. Now this is a daily chart here, and what we want to watch out for is that this might be a little L4 swing up today. So if you see it start taking out today's low around 137.07, then we might see the bonds work lower, and we think that means the stocks can work higher. Well, it turns out we're actually looking for a level 4 bottom in the stock market today. In addition, here's the daily indicator of bonds, or this 10-year note, overbought, trying to roll over to a sell signal as of today. However, the market's actually up, so a little bit of a conflict there. We can't trust that sell signal quite yet. Again, we want to see if it'll take out the low of today. That would increase confidence as it probably going lower, which means rates bounce a little bit, which means the stock market may feel a little bit of relief. We may be seeing money moving out of bonds over into the stock market. So now let's switch over to the intraday chart of the stock market. And so last night, or actually this morning, the initial jobless claims come out, and it was like 3 million, which is probably a record high, extreme record high, and was higher than a trade guess of, say, 1.3 million, even though there were some that were 3 million even higher. And the interesting thing is the market took that in stride. So we think the market feels as though the initial jobless claim was as anticipated, that it's dialed in. And this may be that there's what we would call an alternate forecast suggesting the market should bottom right now for a level 4 bottom, although it could delay a couple more hours. The preferred forecast, however, says that the market will probably not bottom until, say, the first half of the day session today. Okay, so definitely could see a little downside here once the market opens up, but we're leaning towards that if it takes out this high at about 451.75, 2451.75 in the mini S&P futures, that's probably a sign that it has bottomed for an L6, an L5, and an L4. Now, what's the L4? Well, it's the most important intra-week swing, so I'll trace it out for you. It's this swing here. Okay, we had buyer interest, seller interest. This trend was the most sustainable and of lower volatility than any trend we have seen during the entire collapse. So we think this was a sign of accumulation. Now, it may be year-end buying. There may be a little fear of missing out, and that the stock market is quite undervalued on a very long-term basis. But that doesn't mean anything for the next few days, weeks, or even a few months here. There still could be some downside action. So some of them are jumping in on the long side, but they're probably backing out if there's any little bit of a sell-off. They're probably still nervous. But we think the market's trying to find a footing, a floor here. Now, we've revised the L3 trend to have bottomed as of March 23rd. Now, the problem is the model says, but it did not complete enough L4 patterns. So what we don't know is this may be an L4 bottom today, but it could still be lower on into early next week, and we suspect the latest for an L3 bottom is Wednesday of next week. We're concerned that if it can hold and move higher over the next 24, 48 hours, that is just too high and the model just did not work, and the L3 bottom is back here, and we're going ahead and playing it that way. We're bullish now. We want to see some higher prices. Now what we're looking at is yesterday's high was too late for an L4 top. Now granted, every once in a while the model's wrong and sometimes we forget that, but we're going with the idea, okay, if it went higher, then the trends of L4 highs and smaller trends ought to be higher. But the lows were not yet in place. So the market did an oops. It went higher and should not have. It then came down to kind of correct that, but is now going to say, oops, I have to go back up because this is unfinished business. This is an incomplete pattern. So we're liking how this market's behaving relative to what is very bearish news off that initial jobless claims report. We think ultimately we're probably going to see the market higher tomorrow. Maybe they'll sell late tomorrow ahead of another weekend of potentially bad news on the virus. There's news out this morning, such as the billionaire Paul Tudor Jones thinks the market is going to be higher 3 months from now. He said almost guaranteed. Said the problem is we can still have complications into April. He thinks maybe you could see a minor new low by April if we don't see a big turnaround in this virus. And he said if you can just see some evidence of peak virus, it's probably up and away for the stock market. We think that's a general good idea, but for our larger trends, the model's saying April actually ought to be an up month, May a down month, and will it be just a retracement and a brand new long-term bull market, or is it just fluctuation within a range for some time? Or in fact, will it go to a new low in May and then we can take something of long term? We just don't know. Too far out right at the moment. Too much data is required. But ultimately we think there's a chance the market's going to be up in April. It may be working on that rally. It may go to 2,800 to 3,000 in the S&P 500. At any rate, if you're looking for intraday swings here, we think the swing is up for the rest of the day here. But if it takes out the low of this morning at, let's see what that is 2402 and a quarter, then we may have to see a little dip down in the 380s or something, and frankly we probably won't know how low it goes, okay, because again we still could have to pull this back towards 2300 to complete at least a truncated level 3 bottom anytime now into Wednesday. Right at the moment we're thinking no, something went wrong, something's changed. The L3 trend is up from March 23rd and likely up for next week. Hope this has been some assistance here, and as always, manage your risk relative to others.